Okay, nice. It looks like it works, and we are live. Admit everybody. Alrighty. Well, it looks like everyone is in. As usual, we generally get some people trickle in later, so we will get started in the meantime. So hi, thank you guys for tuning in this afternoon to our first time homebuyers webinar. My name is Sam Thompson, and I'm a local mortgage agent. I work for Joe Bladdock, which is probably who you found out about this webinar through. And we are joined with Nickey Calford, who will cover the real estate side today. So you can see in the chat the schedule breakdown. I'll start off first, just touching over, what the mortgage process looks like with you guys, as well as some incentives to get. Then Nickey is going to take us through the real estate side when you'll be, working with her to find your dream home. And then at 3, you'll see we're going to open it up to question and answer. So if through either of our presentations, if you have any questions, hold on to those and actually write them in the chat box. And then at 3, when we're both done, we'll round over and go over any questions of things we missed or things you guys want us to explain more, because there's probably going to be a lot of information. So please ask questions. It definitely helps us, helps you guys. Yeah, so I will get started here. Share my screen. Bada boom, bada bing. Oops. Alrighty, so that looks good. You guys can see that. Perfect. Alrighty, so this is the first time homebuyers webinar. So as I was saying earlier, I'll be covering the mortgage broker process, why you would use a mortgage broker versus just going right to your institutional lender. A lot of the mortgage mistakes that we see, the best part I'll go over is probably going to be how to get some money back, some grants and incentives that all of you can apply for. We'll talk a bit about finding a down payment, and then I'll end off covering what the first-time home buyer incentive actually is. So a little bit about myself. So as I was saying, I am a mortgage agent with Verico Mega Mortgages. I work directly with Joe Bladdock. So we are licensed with all banks and lenders. And yeah, so my role, I guess, sort of in Joe's office is working primarily with first-time home buyers. So before we get started, we'll just look at a really quick case study. So keep in mind some of these facts and figures. If it looks like your scenario, you're in the right place. So this is Jennifer and Joseph. So they came to one of our seminars. They only had $1,400 in their bank. They didn't know what their credit score was, and they only made about $65,000 as a household income. So what ended up happening was, just months after attending our webinar, they moved into their home with biweekly mortgage payments of only $499. And you can see her comment on our Facebook page. So this is really just a testimonial that no matter where you are in the process, getting in touch, with myself and Joe, and then later on getting in touch with Nickey, we can work with you wherever you are to really get you into a home, get you making some of that equity, and yeah. So you're probably wondering from this where you should start. So the biggest biggest plug we can give is to get pre-approved and to do it now. So what pre-approval does, it can avoid disappointment, speed up the process, and save you thousands. So the worst thing that I could imagine would be going to Nickey saying, I want to buy a house that's $400,000. You start looking at homes, you fall in love with one, and then realize that you actually can only get pre-approved or approved for your mortgage for about $370,000. You don't want to be, going into that next stage without having an idea of what you can actually qualify for. So doing a pre-approval with us will actually be able to get you an accurate number of what money you can expect to get out of your mortgage, so that you can take that to Nickey and have a bit more of a refined search in looking for your home. So again, yeah, that helps you know what to expect. It also presents a stronger offer and the seller can take you more seriously. So it really communicates to the seller that, you've done your homework, you've already got in touch with somebody to get your mortgage arranged. It really does present a strong offer having that pre-approval certificate in your back pocket. And one of the best features, especially today when we have really, really low rates, is you can get a rate hold for 90 to 120 days. So if we see the rate start to rise, which it has to happen, it's probably looking like it's going to. It's actually a great time right now to get in with these low rates and secure it at that low rate that you get approved for before they start to rise. So here's just a list of some of the banks and lenders that Joe and myself work with. So some of them you may not know, some of them may be your home bank. Really, what this is just demonstrating is we have access to numerous products as well as numerous banks and lenders. So if you feel more comfortable sticking with your personal bank, we can work that out for sure. If not, we can generally find a little bit more flexible mortgages through some of the other lenders on this list. So how do you get pre-approved? So usually it starts with a text. At the end of this webinar, you'll be getting an email with some of the information as well as an appointment link where you can schedule to have a pre-approval call with either Joe or myself. So COVID actually hasn't really changed the process much for us. It was more or less done completely virtually before. But just in case you're wondering how to get in touch with us, we can do it over the phone. We can do it over text, email, FaceTime. No one really uses Skype, funny enough, so we can do Zoom instead. We're not really required to meet at any point of the process to get your pre-approval. And all actually you'll need to bring to that is going to be your pay stub as well as a photo ID. And then as we progress later, you can simply email or fax us any of the further documents that we'll need to get started. So why do Canadians use brokers? It's a pretty funny picture, but it's a really good analogy, I guess, or a breakdown of why Canadians would use brokers to find mortgages that fit. So Joe's not here, but I am. So Joe's actually a really tall guy. You probably can't tell, but I'm relatively tall as well. And the struggle of finding, a shirt that fits properly is actually a lot more hard than you think it would be. So you can find one that fits on the shoulders, but you're swimming in it, or it fits very poorly, like the guy on the right here. So what we can do is actually find mortgages that are going to fit you perfectly, so that you don't have to actually compromise and and limit yourself to maybe the limited number of options that your institutional lender is providing with you at your local bank. So we can access quite a few more products because we are licensed with all banks and lenders. Protecting your credit score is a big thing because what we can do is we can actually only need to use one credit check, and that's valid across all of the banks and lenders that we use. So it can find multiple products that fit what your goal actually is. And buyers having a unique story. So this is actually a really big one because we know that every borrower has their own story. And what we actually get to do is we get to communicate with the underwriters at each of these lenders and really communicate what your story is. Just as a quick testimonial for this, we had a client, I think it was at the end of February, maybe March, who had called us and was looking to get pre-approved. So when we did our credit check, a couple years back, he had a little bit of bad credit where a bank may question that or just straight up decline the mortgage application. But what me and Joe were able to find was that at that time he was actually just a temporary seasonal worker, and since then he'd actually secured full-time permanent status. So we were able to communicate that to the underwriter, and what we saw was that just in the next day actually he got fully pre-approved. So we really get to chat with the underwriters and communicate your situation, and it actually does really help the approval process happen quickly. And yeah, and again, using a broker is completely free. So we actually get paid by the lender in what could be called a finder's fee. So us working for you doesn't cost you a single cent, and we only get paid when you get the house. So really it is in your best interest to get you a mortgage that fits and get you into that home as smoothly and simply as possible. So as I was saying about finding mortgages that fit, there is a ton of different mortgages that we can look at and discuss with your scenario of what one fits best. If you're looking for a flip mortgage, no down payment, poor or bad credit, renovation and new builds, any kind of mortgage that you need, we'll be able to really advise you strongly of which direction we think works best for your 5-year plan, your 10-year plan, whatever your financial situation is. We can really work with you to find something that'll fit best. This is one of my favorite parts. So there was actually a study that was done showing that brokers on average saved their clients $42 a month compared to just using an institutional lender. So what that works out to on a daily scale throughout the month is about $1.50. So that works out to be one small Timmy's coffee every day of the month. They have raised prices, unfortunately, so it is actually every weekday of the month. But if you love coffee as much as I do, there's no better reason than to get a mortgage through Joe or myself, because we will buy you a coffee personally every weekday of the month in the savings that you'll have. So now that we've established, what the difference is between mortgage brokers and banks, we're going to look at some of the mistakes that Joe and myself see come into the office most commonly. And a lot of these, the clients that are making these issues don't even know that they're being made. So mistake number one is going to be ignoring your credit score. We don't want you to get stuck with a bad rate. So it's always good to review, and if you need to, fix your credit ahead of the game. So it's very easy now to get an idea of what your credit score is. You can do it through Equifax. There's also sites like Credit Karma, and a lot of your mobile banking apps will also have a feature that allows you to check what your credit score is. So it's a good idea before even starting the conversation with us, have an idea of what your credit score is. If not, we can run through what it should look like and pull that credit for you. So if you have gone through a bankruptcy or consumer proposal, we really want to advocate for the 2-2-2 rule. So what this is if you have had a bankruptcy or consumer proposal, the banks are not going to lend you a mortgage until you have at least 2 credit cards for a minimum of 2 years with a $2,000 limit on the card, not actually balance. So if you are discharged and haven't done this, it'll be your first step. So again, if this does sound like you don't stress out, contact Joe and myself, and we can look at where you are in your process of your consumer proposal, and really, work with you to find out what timeline is going to be accurate for you, and maybe try and find ways to speed up that process for you. So the breakdown of credit, what we see in getting approvals is that anything above 630 is going to be considered a good credit score. Anything, if you have it in the 700s, that's really strong credit. You shouldn't have an issue with that. Anything below 630, around the 500s, it will need a bit of work. So again, reaching out to Joe and myself, we can help give you, some ideas, some tips, ways to start growing your credit score and sitting down to see what you can actually qualify for, so that we can work with you to build your credit to get a higher mortgage amount. Just as a quick breakdown, so you know sort of what goes into calculating a credit score, you'll see on the chart here, the biggest thing they look at is going to be credit history. So if you do have any, old credit accounts from high school or back in college, it's actually a good idea to keep holding on to those, because they will improve your credit score. Once you close that account and say open a new one, you lose all of the credit history that was tied to that older account. As well, debt owed is the second largest thing on the list here. So how we like to illustrate that is just breaking it down to 2 different scenarios. If you had $900 on a $1,000 credit card, it's going to show really negatively compared to $900 on a $10,000 credit score. So you may be thinking, the amount that you've actually used is the same on both, but because you're using $900 out of a $1,000 credit card maximum, it'll show the banks that you're using 90% of your credit that's available to you. So it's always good to be using, under 50%. I think a good benchmark should be around 30% to 50%. So again, if they decide to offer you a credit limit increase and you trust yourself with it, take the credit increase and thank them for helping improve your credit score. So mistake number 2 is not reviewing your options. So as I was saying earlier, with using a mortgage broker or agent, we have lots of different rates, lenders, ways to pay, and penalty calculations. So in chatting with us, we can really help review what your options are and what ones actually fit you best. We don't want you to come in, maybe one-track minded, thinking this is the only way that you'll be getting a mortgage. This is exactly what you're looking for. We can really review what one will actually fit your scenario best. So we're going to take a quick look at rate options here. So 2.84 versus 2.99. So first of all, you can probably tell that this is an older presentation because rates are nowhere near 2.84 anymore. But is there a difference? So on paper, it doesn't look like a lot, but over the life of your mortgage, it can actually add up to almost $10,000 in a difference just from 0.14% rate difference on your mortgage. So again, that's something to consider and something that we will take into account to try and get you the lowest rate possible to maximize those savings. As well as the different banks, so there's more than 1,000 different mortgage options that are available to you. So running whatever your specific scenario is by each of those banks can result in significant savings. So you can just let us do all the work for that. We'll have an idea of what would benefit you best and ways to save some time in the process of finding the one that'll fit you and your exact scenario. Payment options, monthly versus biweekly. A lot of traditional mortgages are paid monthly through institutional lenders, but we're going to see here that biweekly is a much better option in terms of the amount of money you'll save. So you can see on the chart here, the yellow bar or chart is going to be on biweekly payments, and the blue is going to be the traditional monthly mortgage payments. So you can see that just by increasing the frequency that you're paying, you'll actually spend more in interest over the lifetime of your mortgage. Penalty calculations. So this one is actually really, really big. So we all know that life happens, and sometimes the only option that's going to be available will be breaking your mortgage, whether it's from a separation, job loss, anything that's going to require you to break your mortgage early, out of term. We don't want you guys to get stuck with a massive penalty calculations that is just going to hurt you further. So we really like to find lenders that offer much softer penalty calculations, around the range of 5,000. We don't want you to sign unnecessarily with TD and get stuck with an $18,000 penalty just because you have to break your mortgage early. It's a really big thing to keep into account that a lot of people don't think of ahead of time, but it is actually huge. If you're stuck holding the bill, much rather have a $5,000 bill than a upwards of $20,000. So mistake number 3 is going to be borrowing too much. We don't want you to overextend yourself and become house poor. We want you guys to be able to order in from DoorDash, extend your Netflix subscription, whatever it is that keeps you going during COVID. We don't want you to be able to spend so much on your house that you're not actually able to live inside of it. As well as borrowing before you buy, we want to make sure that if you're planning on getting a car loan, please wait until after you get your mortgage first. We've noticed that having a car loan of $300 to $400 a month can actually limit in a big way what you can qualify for in your maximum mortgage. Sometimes it can work out to be almost $50,000 less just from having a $300 monthly car payment. And if you have already have a car on loan, don't panic or get scared. Just chat with me and Joe, and we can work out ways to still get you to qualify for the maximum that you can with that car loan. So mistake number 4 is going to be forgetting about closing costs. So this is the hidden fee that seems to jump out at people unexpectedly. So there is a little bit of a breakdown to how to get those costs. When we do these in person, we usually have a lovely little laminated sheet in a booklet that we'll hand out to everybody. But due to COVID and that this is a webinar, we will be emailing you this same closing costs worksheet. So you can expect that in the next couple of days to receive that. And mistake number 5, simple enough, not getting pre-approved. It really only takes, about 5 to 30 minutes on the phone with myself or Joe. You only need your ID and pay stub. It's completely free. Can't stress that enough. It's completely free. It can help you win an offer, and it can be done completely virtually, over text, email, whatever's most comfortable for you. Get it done, and then you'll have a better idea of, what houses to look at when you give Nickey a call to start shopping around. And on the topic of once you have been pre-approved, really don't forget to start setting up your home buying team. So never rely on, seller's agent, anything like that. It's really in your best interest. This is quite a big investment, to really rely on buying agents, such as a mortgage broker, using Nickey as a real estate buyer's agent, finding a home inspector, insurance broker. All of these things are going to be great steps, to put you, one step closer in the better direction of getting into that home with, the most saved and the most efficiently. So case study number 2. So this was over in Tavistock, Ontario. So this house was worth when they bought it, $329,000. The down payment was approximately $16,450, and they were making biweekly mortgage payments of $696. So what happened? So just after 5 years, the market value of the home had increased to $419,000. They had $339,000 worth of mortgage left, so they could sell that home and take $140,000 in equity to their next home in just 5 years. So really, this is just a quick illustration on the amount of money that you actually save just gaining in equity over 5 years. No tax-free savings account, nothing like that is going to get you the same return that real estate can get you. So always keep that in mind when you're wrestling with renting versus purchasing your own home. If you purchase a home, it'll be doing the work for you and gaining gaining market value as you're actually living in your investment. So now I'm going to cover my favorite part. This is how you can get some grants, some rebates, some credits. You can see the little tick there. This is, in fact, the best part. Let's see. Alrighty, so the first one I'm going to go through is going to be an energy efficient refund through Genworth. So if you buy an energy efficient home, there could be a refund of approximately $1,000 available to you. This is also available if you purchase a home and increase its energy efficiency by, I believe, around 5%. So as an example, if you purchased a home worth $425,000, that refund works out to be about $1,100. So there's an Ontario and Toronto land transfer tax rebate that is available if you're a first-time home buyer. So if you're buying in Ontario, they will give you a refund of approximately $4,000. If you are buying in Toronto, I'm not sure if anyone is here, but they will kick in an extra $3,700, bringing your total rebate up to $7,700. New to Canada benefits. So this is actually a really cool initiative that's been started, that if you are a permanent resident within the last 5 years, they've actually minimized the employment requirements just to 3 months, and there's no credit score required. So they will just look at, phone bills, insurance statements, some bank statements to calculate what your credit is. So if you are new to Canada, let us know in, your pre-approval or your pre-qualification call with us. And it's a really cool incentive to help, jump some of the hurdles that you can get stuck up on if you are a newcomer to Canada. So if you're looking at purchasing a new home from a builder or building one yourself, there is an HST rebate that is available to you if you are a first-time home buyer. So for example, if you were working with a builder to have a $425,000 new home, that rebate could work out to be about $33,000 back into your pocket. Tax credit available. So if you are a first-time home buyer and you purchase your home, on your income tax, there will be a section to add the tax credit of up to $5,000. So just as an example, if your household family income was about $85,000, then that could work out to be about $2,100 back into your pocket. Free 1-year home warranty available for first-time home buyers. So this is through some of the lenders that we use. They cover home heating, air conditioning, electrical, water heater and plumbing, all the necessities. So, as Murphy's Law works, if anything's going to go wrong in your new home, it'll be within the first year of owning it, right when you've, paid the deposit, you've paid for all the closing costs. So ask us about what lenders actually provide this warranty, and it covers up to $10,000 in repairs, and there's no inspection required. So if that's something you're interested in, when we're having a follow-up chat, don't forget to mention it, and we will make sure that you get that. Withdrawing from your RRSP completely tax-free. So if you're having difficulties getting your down payment together, the government has actually increased from $25,000 to $35,000 that each home buyer can withdraw, or actually not 50,000, or sorry, yeah, it's $70,000 per couple, completely tax-free from your RRSP. So this will save you an additional $21,000 in tax. Just to withdraw from that, it's through a home buyer plan, I think it's called HBP. So this is, again, great if you're having trouble getting your down payment and would like to withdraw from your RRSP. So for this one, you just have to be a first-time home buyer, a person with a disability, or buying a home with someone with a disability, or if you've just not owned a home, owned any property in the last 4 full calendar years, you can qualify for this as well. So how to get a down payment even if you don't already have one. So all of the municipalities on this list here offer what is called, they all have relatively different names, but they're more or less just affordable home ownership grants. So these are municipally funded. You will be put on a wait list after applying for it, but it is basically a shared equity loan that is completely forgivable. So some of the municipalities will offer you 5%, some of them can be 5 or 10%, depending on what municipality you're looking at. And it will actually add that 5 or 10% to your down payment, lowering your monthly mortgage payments. And the beauty of these programs is that they are forgivable. So if you are interested in purchasing your forever home and you live in it for at least 20 years, the loan is completely forgivable. You don't have to pay anything back. So keep in mind that you do get waitlisted, so it could be 6 months to a year before you can actually receive funding. But it is a great opportunity if you are planning on staying in your home for longer than 20 years. That way you don't have to pay anything back. Other ways that you can access your down payment is going to be through a line of credit, some rent-to-own programs that are available, gifted equity from the seller, some money from family is a big one, or using taking advantage of some cashback mortgages that are available. So in total, looking back at all of the information I just threw at you guys, the total savings you could have is about $52,000. So I know I went through a lot of those really quickly. I don't expect you to need to have remembered all of that. The point is that we know all of these incentives, we know how you qualify for them, and we can actually point you in the direction of which ones are going to suit your scenario best in order to save time and just make this process as quick and painless as possible, and get you guys the most money back that you can qualify for. So as I'm closing, I will just cover what the first-time home buying incentive is. So how this incentive works, it enables first-time home buyers to reduce their monthly mortgage payments without increasing their down payment. So it's not interest-bearing. You don't have to, keep paying it through the year. What it does is the government of Canada will offer you 5% if it is a resale home, or 5 to 10% for a new construction home purchase. So we'll just look at a quick breakdown of using the incentive versus going without. So you can see that both of them, the buyer's income is $100,000, the home price is the exact same, as well as the down payment. Just the column on the right is going to have the additional 5% down from the first-time home buying incentive. So what that does is it lowers the insured mortgage to $378,000. The insurance premium is lowered by about $5,000. And what you save in monthly mortgage payments is $123 or $1,400 per year in mortgage payments. So it is a great way to save some money, put that extra $1,400 in a savings account while you're paying for your mortgage. buy yourself a hot tub, whatever life-giving things you want to do, that money's completely yours. So what properties are eligible for this incentive? So any new construction home or resale homes, single family homes, duplex, triplex, fourplex. Basically, if Nickey can find you the property, it will be eligible for the first time home buying incentive. So let's just look quickly at who can apply. So if you're a Canadian citizen, a permanent resident, or a non-permanent resident who's legally authorized to work in Canada, you can apply for this. Your household maximum qualifying income is limited to $120,000, as well as the maximum borrowing amount is capped off at 4 times whatever your household income is. So say your household income was $100,000, then the loan is maxed at $400,000. And again, at least one of the borrowers must be a first-time home buyer. That is the end of my presentation. We do want to offer you guys a chance to win your down payment. I don't know why you wouldn't want to even take the chance on that. I would love to as well. So as a thank you, we have a little sign-up link in the chat now. I can repost it after my presentation to just add, quickly your email and your address. We will send out a thank you card as well as a scratch ticket with prizes that are up to $10,000. So how incredible would it be? End of this whole presentation, you're now more educated in getting a mortgage. Nickey's going to make us more educated in finding the right home. And then on top of it, you get your down payment back. It is a win-win-win scenario. So don't forget to sign up before you leave today. So thank you. Remember to get pre-approved. You can call or text Joe or myself at either of these numbers. You can visit mortgageweb.ca/barrymortgagebroker or facebook.com/bemortgagefree. But that is the end of my presentation. Thank you guys for listening. I hope that all of that information didn't go right over your head. And that's it for me. Nickey, do you want to take over?
Yeah, so I am trying to find, where did it go to share my screen? What the heck happened here? Here we are. Got it. Okay. So you guys should see my screen now. You got that? Okay, so I'm Nickey Calford. I'm a real estate broker here in London, Ontario, and I've been at it for quite a few years now. I have a 13-year-old daughter, and we do a ton of volunteer work. So in the winter, when I'm not selling real estate, we're usually found on the ski hill here in Byron. And I'm on ski patrol. So that's kind of how I spend my spare time all winter, all summer. We're out walking and selling real estate is mostly what we do. All right, so last year, I was the top facility trainer in our brokerage, and I was #1 for closed volume, as well as #2 for closed sales last year, as well as a double gold medal winner for Keller Williams International. So I do work for Keller Williams. We are a huge firm, one of the biggest in the world right now, and our top priority and one of the things we're really known for is our training, and that we are all, that's one of our main values. So we're constantly doing training seminars and bettering ourselves so that we can help our clients to our best abilities. All right, so we're going to start with some questions. You're welcome to throw your answers in the chat, but I'm just kind of going to keep going through. You can kind of keep track of how many answers you get right. But what percentage of the global population are millionaires? Is it 1.1%, 3.7%, or 5.2%? Next, 1.1%. So if you guessed that, you're correct. Not a lot of millionaires out there. So what percentage of the world's millionaires invest in real estate? 78.3%, 82.2%, or 90%? I'll give you a second to think about it. Talking about real estate, mortgages, probably a good chance that it's 90% of millionaires invest in real estate. It's a pretty big chunk. So these are a bunch of Canadian families. You can see their names all along the one side, the Greenberg family, Israeli family, all of the things that they invested in. So they would start out with a property, then switch it into a duplex, multiplex. Sometimes they'd buy hotels, switch them into apartment buildings, that sort of thing. And that's how they ended up with their net worth. And they're all well over $1 billion. So we're going to teach you how to get there. It may take you a few years because we have little building blocks on how to get there, but you may just end up with just your family home, and that's okay too. But this is how we're going to get you $1 million to retire on. So what is the average interest rate on a high interest savings account? And I actually want to see your answers on this one. So put them in the chat because I'm always interested in this one. Is it A, 2%, B, 5%, or C, 10%? I've got one answer for 2%, 2%, another one from Nathan, 5%, A, okay, all right. Whoever answered 5%, I want to know who your bank is because I'm going to switch my high interest savings account over to that bank. We are usually at about 2% on a good day. Sometimes you'll see 1.6%, and that's high interest for them, what you're gaining on your savings. So how much has the average house in London appreciated in the last 12 months? This is even with COVID going on. How much has it increased in the last 12 months? A, 9%, B, 26%, or C, 13%? We got an A, C, okay, 13%. 13%. That's a heck of a lot more than a high interest savings account. So if we took your 5% down, so let's say you're going to buy a $300,000 house, you have $15,000, you put it into a high interest savings account, you're going to make 2% on that $15,000. Okay, not so bad, safe, it's not going anywhere. What if we took that $15,000 and put it as a down payment on a home? And that home at $300,000 gained 13% on $300,000, not just the $15,000 that you put into the down payment. So you're going to actually end up with, what's that, $33,000 opposed to the measly 2% that would come off of $15,000. So this is how the rich get richer. What they would do is then take that $333,000 home, sell it, take the equity out, reinvest it into something else. Or not even sell that home, continue living in it, refinance it, take that $33,000 extra dollars that they made and put that on the down payment of an investment property. So this is how the rich get richer. And they use investments and the properties to fund other properties that also grow and continue to appreciate. So we'll go through a little bit more of that later. All right, so if we take a look, I started posting these to show you what the market's doing right now. And people are worried, you know, there might be a crash. Maybe this is, you know, prices are going to go down. We should wait until they do. This shows a little bit of stuff going on here. So we have the average sale price in February before COVID was $445,000. In March, it went up to $447,000. So it still continued to go up even when half of March was in lockdown. The next slide here, we have April. So April did go down a little bit to $423 is the average sale price. But May, we're back up to $445,000. So that little bit of a blip, because everyone was in lockdown, we did see a little bit of a slowdown, but it's now gone back up. So yes, COVID has made things different. We do show properties and we have less properties on the market to see. But every day right now, that number is climbing. And we'll go through those numbers as well. But waiting to buy doesn't always work great for us. The values are always going up. And if you see the year-to-date average, I can show you right here with May's year-to-date average is up 7.8% over 2919 just from today's date or in May. So it's been increasing no matter what, right? Even when it slowed down a little bit in April. So if we take a look at your horizontal wealth and how you make money throughout your career, you've got you and your career, you know, your daily paycheck or weekly paycheck, however that may be. Your company bonus may add you a little bit more. If you scrimp and save and put lots into RSPs, you'll save up a bunch more. If you're really good with mutual funds or stocks and bonds, you can save a little bit more and gain more. But a real estate investment, when you consider how much work you need to put into it and the length of time that you have it, it's going to gain you the most amount of money with the least headache. And it also provides a place for you to live, which is an extreme bonus that you can't get from stocks or bonds. All right. So the real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it's about the safest investment in the world. And it is. We look at even through COVID, through everything else, when the stocks kind of did a plummet, housing prices didn't go down a whole lot. We stayed fairly stable. And we've seen that through multiple depressions and ups and downs with the market through the last 15, 20 years. It's been a pretty steady climb. All right, so I'm going to give you a reminder that you want to click on the link that Sam will put in the chat so that you can win your deposit and that you'll get a better chance to win your deposit and we can move forward even faster this way. All right. Okay, so I don't know what happened to this slide. We'll adjust it later, but I just want to let you know that if we've got questions or anything else that we haven't got to in the chat and you have to run right after, you're welcome to email both Sam and I, or we can put our cell phone numbers in as well, so that you have an opportunity to get your questions answered. We don't want to run out of time, and Sam and I will stay on as long as we can, but some people we know will have to run right away. So just wanted to mention that one. Okay, so first-time home buyers between the ages of 18 and 35 are expected to spend an average of $350,000, which is what we're seeing here in the London market. According to BMO's Millennial Home Buyer Report in Canada. So almost 1/3 of those surveyed didn't think they were ever going to afford that home. Yet 43% of people between 18 and 24 expressed that they intended to buy a house in the next 2 years. And we want to work with you to get there, right? So that's an increase, 43% above that 34% in 2015. So it keeps going up. More people understand that buying real estate is a great investment and they want to be doing that. All right, so when we look at renting versus owning, when you're renting, you're building your landlord's wealth. Your monthly payment is likely to increase with that yearly increase that's regulated by the government. So it's going up 1.8% or 2% or whatever it may be that given year. You may be limited to what you can customize in your home. So it's not up to you whether the bathroom gets renovated or if, you know, the floor's wearing. You don't get to say when that gets replaced. You can beg and plead for the landlord to do it, but if they don't feel value in that, they may just say, tough luck, you can't do it. So if you're planning on living in a home or the same place for more than 2 years, buying is probably the best option for you. So one, you've got a locked-in monthly payment. So you know what your payment is going to be every month, or bi-weekly, or however you choose to pay. And you're locked into that. You can make sure it's the same for the next 5 years. You build your own wealth. right? So you're paying down your mortgage and not someone else's. You have the freedom to customize things however you want, which is a great thing because, you know, I'm a bit of an interior decorator, and at one point my house was getting smaller and smaller on the inside because I would repaint every 6 months. I've now, as you can tell, paint most everything white and then just change things out as we go. But just one thing, if you really like to change your space or want the flexibility to be able to do that and add value to your own home, you can do that. Oh boy. Now I've lost it. There we go. All right, so how do we get there? We're gonna go through these steps. So first, real estate education. You guys are here, you've got a webinar, there's blogs, there's podcasts, there's forums. We have other clients that we've gone that have been in these seminars with us and that have gone through the whole process and are more than willing to talk to you and are quite happy to say, hey, this is what we ran into. This is how it got fixed. This is how we were able to overcome this. And look at our awesome house. So we have those success stories and we have those people that have gone through from right where you are right now to owning their home. We made it really easy to contact a mortgage broker or mortgage agent. Sam is right here. And again, you'll have all of our contact information. Sam went through all of the things that mortgage brokers are going to look at and talk to you about different solutions. So people buy and sell for all sorts of different reasons, and whether it's a divorce strategy or anything else, we're going to look at your long-term plan and help you get to where you need to be. Find an informed real estate agent. Well, I'm right here. We made that one easy for you too. So we set up a buyer consult and go through exactly what you guys need. So it's about your goals, your long-term plan. What's the plan? Do you want to turn this one house into an investment in 4 years and buy your dream house? Is this a stepping stone? Are you, looking at going back to school in 5 years and want to build some equity in a home that you can pull that out and put it towards schooling? Do you have kids that you want to move to a better school zone and you want to start building some equity? So we're going to look at that and figure out what your plan is. We look at your pre-approval, we figure out what your preferred area is, and we walk you through the whole process, whether it's buying from a private sale or directly from a builder, or anything that's from the MLS. My job is we watch the current market conditions. So we know how many offers are going in on different properties, what people are paying for them, and we can walk you through that and make you confident in your offers when you're putting them there. I then become your trusted negotiator. So I'm going to look at trying to get you that house for the lowest amount possible. The listing agent that is selling the home for the sellers, their job is to sell that house for the most money possible. Get the seller the most money as quick as possible with as little inconvenience as possible. So when you call the listing agent and say, hey, can you show me this property? I'd like to put an offer in. They're like, oh, okay, perfect. They can't help you. They'll write the offer, but they can't tell you how much to put in. They can't do all of that because their job is to get the most money for the seller. When you work with a buyer agent, we work on your behalf. We know the ins and outs of what your best plan is, and we negotiate that and walk you through how to get there. And we try and get you the house you want for the lowest amount of money possible. Seems pretty fair. As a buyer agent, I don't get paid until the house is sold and closed, and the seller actually pays us. So it costs you nothing to have someone work on your behalf. All right. So then after we've done our buyer consult, we've set up your search, we figure out where we're at. The next job is to find a property for you. So we have a bit of a flow chart here, and don't expect you to memorize it all. We'll go through it again, but you can see sometimes we're going to start things over. If we don't get an offer accepted right away, we'll have to go and look at other properties, but eventually we're going to get you down to where you have a possession date and you actually get the keys to your new home. And it is probably one of the most exciting days of your life, around having a baby, maybe getting married. I don't know. I think buying a house is probably one of my most exciting days. But it gives you something to get to that next passage of life, right? Where you own your new home. Super exciting. And that's why we do what we do. We love to see you guys succeed. All right, so this is my very first home. I did buy it when I was 21, so like 2 years ago. It's fine. So I bought the house for $61,000. I sold it almost exactly a year later for $74,000. Yes, it was a while ago. It wasn't 2 years ago. These prices are pretty hard to find right now. But I put $2,000 into material and a whole lot of sweat equity. So paint, I ripped out floors myself. I had to redo plumbing. I learned how to do a lot of things on my own. When I moved in, the carpet disintegrated in my hands as I pulled it up. There were crack pipes in the kitchen drawers. There were like grass in the backyard was about 4 feet high. The toilet was not attached to the plumbing underneath the house. It just kind of drained into a crawl space. So needless to say, the house needed a lot of work, but I was able to profit $11,000 and roll that into the next property I bought. Since then, I've bought 22 other properties and own 4 now. Yeah, okay, it was a little bit longer than 2 years, maybe 5 years ago. But it can be done. Not everyone wants to be handy and wants to put the sweat equity into it, but there are ways you can buy a great house and it gain equity and you be able to profit in the end. So these are perfect examples. These guys were all at our seminars. The guys on the left, they bought the house for $191,000. Their monthly payments were $1,000 and $1,005 a month. That was with 5% down. The clients were renting for $1,275 a month. So they're saving every month with their monthly payment. They're paying down a mortgage every month, and their property's gone up in equity. They've since sold this property. We sold it for $281,000. So almost $90,000 more in a year and a half. They've gone on and bought a bigger property, and since then have bought another property. And that's all within 3 years. So it can be done. The guys on the right, they bought the house for, I can't even see it, but about $234,000, I think. Their monthly payments were $1,075 a month. They were paying $1,360. So it was a really cute huge yard, a garage, everything else. They got way more than what they were living in before. They're still there. They've had a baby, and I think there's another one on the way. So they have a great place to raise their family, and they're gaining equity. So these guys were condo buyers. The ones on the left, their monthly payments were $948. That included their condo fee. The clients were renting for $1,025 a month in a little apartment. Here they have a great little condo now. The guys on the left, on the right, they were one of my favorites. These guys were living a family of 4 in a 1-bedroom apartment. Not a great apartment, but they had 2 little tiny kids and they wanted somewhere for them to grow up. So these guys bought this awesome condo. It backed onto green space. Their monthly payments were $1,186 and the clients were renting for $1,200 in a 1-bedroom apartment building. So their lifestyle, it wasn't just their payments, because they didn't drop by that much, but their lifestyle is tenfold. They can now have friends and family come over, and they have lots of family from the States that comes and visits. So it made a huge difference in their life. All right, so the 3 ways they're saving, I've already mentioned them already, but it's monthly payments are lower than their rent, or equal to even. Monthly payments are paying down the mortgage, and the property is gaining equity passively. All right, so today on the market, I looked this up this morning. This one is active today. It's listed for $324,900. It's a cute little house. It is in the East End of London on a fairly decent street. Super cute. The monthly payments on that are $1,381 with 5% down. So I did give a bit of a window to bump the price up in a bidding war. So that monthly payment doesn't count for a $324,000 mortgage payment, but it's doable. Who here is paying close to $1,300 or $1,400 in rent? Enough people? It's doable. All right, so active in today's market, we have 62 condos and 20 houses listed under $300,000. When I did the numbers a month ago, we had much less, of course, because we had less listings, period. I expected it to stay fairly low under 300,000 and the prices in the 300 to 350 range to have more houses there. The nice thing is that when the markets come back up, we're still having houses under 300,000. Not a ton, right? There's only 20 houses, but there's still 62 condos that are available under 300,000. When we look at how, or the next price point up, we've got 9 condos and 27 houses up to 350. So it's still doable in that first-time home buyer price range to find a decent house, a decent condo, and get you moving on, right? All right, so many of us are now living to the age of 100. If people retire at 65, they're facing a 35-year retirement. Just to live on the poverty line, you need to have $645,000. I'm going to be completely honest. I didn't think working at my full-time job day to day that I was going to be able to save that much money for my retirement. That's why I started flipping houses, to build another income stream. All right, so Canadians on average said they believe they'll need at least $908,000 for a decent retirement, and that need tops $1 million in Alberta and British Columbia. At the same time, 3 out of 10 people aren't confident they can do this. I didn't think I could get $645,000. Getting $908,000 is another stretch. And there's a lot of people in that same boat. All right, again, click the link. You guys can win your down payment. We'll get through that one. All right, so you're welcome to follow me on Twitter, Instagram, Facebook, any of those things. Or there you go. You can contact both Sam or I at our email addresses and phone numbers there anytime you have questions or anything else. But just wanted to say, it's so possible for you guys to get to, if your dream is to own a home, it's still possible to do that. And we're here to guide you through and to make it, whether you're starting out with bad credit, we can work with you to build you so that you're getting there. And then once we're there, we'll find you the house that works for you. And maybe it's not necessarily your dream house. My house, when I bought it, my very first one was not my dream house, but it got me into one. Then I gained equity, and eventually I could get into another one that was pretty close to my dream house. All right, so that's the end of my presentation. We will open it up to questions, and hopefully we'll get to everyone's answers. If not, you're welcome to reach out to Sam and I via email or text or call or anything like that, and we can go from there. All right. Do you have any questions?
Thank you, Nickey. That was really good information, and I love that you've really highlighted that to use both our services for mortgages as well as Nickey's. It doesn't cost you anything until you fully have a mortgage and are in your home. So it's really great to have both of us who are quite knowledgeable in home ownership. I mean, Nickey displayed her resume for us in the homes that she currently owns and the ones she's flipped just a couple of years ago. So we're really a great resource to use. And again, yeah, you don't pay anything, you don't pay anything to us, period. And we don't even get paid until you're in your home with your mortgage. So.
Okay, so Nathan has a question here. Should we start taking steps such as talking to a mortgage broker and real estate agent only after being pre-approved, or do you recommend speaking before starting the process? So you're going to talk to a mortgage broker to get pre-approved. So they're going to sit down and go through everything, talk about your finances, talk about your goals. And once you're pre-approved, then you sit down and talk to me as a mortgage or as a real estate agent. We can talk ahead of time and we can kind of have an idea of what the market looks like, but we don't start showing properties until you are fully pre-approved. All right. And then I think way up here, there was a, okay, so Erica had, what were the websites that you can use to check your credit scores yourself?
Yeah, great question. So there is one that a lot of people use called Credit Karma. I don't know if it's .ca or .com, but if you are set up with any sort of mobile banking, like RBC does it, I know that CIBC does it as well. You can actually do a soft credit check through that app as well. Now, keep in mind that any of the free credit checks that you do online, they're going to be considered soft credit checks. So they won't be the exact same that we get when we pull our credit through Equifax, which is considered a hard hit. But it'll give you an idea. I mean, they're usually, not off by that much, but it'll give you a great idea of where you're at credit-wise.
So Sam, there's been a lot of talk this week, especially about CMHC and the new rules that have come out for buyers. Can you touch a bit on that?
Yes, so as of July 1st, CMHC, due to the COVID scenario, has changed a bit of their, their qualifications for getting a new home. So basically anything under 20% down, which would require you to have to make CMHC insurance payments on that mortgage, anywhere from 5% to 19.99. There is going to be some extra blocks in the way in getting that mortgage approved. Mainly also that there is going to be a limit to what you see as your maximum your maximum mortgage amount. On average, I think they're saying it should be, could be reduced to about $30,000, around 11%, as well as the credit score that's required. The minimum is increasing from 630 to about 680. So these are definitely things to keep in mind when you're looking to get your home. It also is sort of a call to, if you're planning on buying within the next few months anyways, to really reach out to us and start the process now, because if we can get you signed on a contract for an active search now before July 1st, then it can actually be grandfathered over into July, with whatever you've already signed for now. So if you are planning on buying in the near future, especially, reach out to us to get the process started now and get in before these new changes happen through the CMHC, and that's July 1st. So definitely, yeah, it's an extra step too.
I think too, and one of the big things that everyone is very scared of is, oh my gosh, they've just made it even harder for first-time home buyers to qualify, because we are only mostly putting 5% down, and we do need an insurer on our mortgages. But one thing I know is that CMHC is only one of 3 mortgage insurers. And what also came out was that CMHC, yes, they have tightened their rules to make mortgage is a little bit less risky on their side, but there is still Genworth and Canada Mortgage Housing as well that they have not followed suit with the same rules. So we do have other options. So when people are saying, and the talk is, oh my gosh, it's so much harder to get a new house, there are other options. And working with a mortgage broker, they can look at your story and say, okay, this one is going to work with all of the insurers, or this one needs to be specific to this insurer instead. And they would know to send it to Genworth versus sending it to CMHC. So another great point on working with a mortgage agent and really having them work on your behalf. Okay, so for a newcomer who just arrived in Canada, who is able to pay a down payment, with my bank TD, is there a possibility to get a mortgage? Okay, so I'm assuming you have your 5% down or for your down payment, and then you're asking, can you do it through your bank, or is there a possibility to get a mortgage?
Yeah, so it does sort of depend on what price, what mortgage maximum you're looking for. There's a lot of things that go into it. If you do have 5%, on an idea of, what you would like to qualify for, then definitely reach out to us and we can look at the specifics, because there's quite a bit, not a ton, but quite a bit of calculations that do go into seeing if you would be approved with a lender, such as, your current credit situation, any sort of cards, outstanding loans, all that kind of stuff goes into actually getting approved. So it is a great time to reach out to us if you believe you're in a comfortable position. If you reach out to us, even if we don't get you pre-approved, we can definitely start the process of getting you in a pre-qualification, in which we won't pull your credit, we won't do the full submission to a lender, but we can chat with what your income levels are at, where your credits are at, and see if all of that works out with the respective lender to see if you would actually get pre-approved for that mortgage. But yes, definitely, having a down payment, I'm assuming through calculating that you have an idea of what you would like to spend. That's a great place to be in. And if your question was also about using TD, TD is definitely a bank that we do work with. So we can provide you with a mortgage through them. If you're not preferential, then we can see what TD's rate is and maybe find some lower rates, or a little bit of a better fit maybe for whatever you're looking for. It's a good question, Naya.
Okay, so Nathan, I'm going to add on, because you said, do you anticipate CMHC changing the minimum mortgage payments required, increasing the minimum rate from 5 to more? So there was talk that they were going to increase the minimum to 10% down, but they haven't done that yet. They've just done these other changes instead. So we're still okay with the 5%. All right. Anyone else have any other questions? I like this part.
It's a good question.
Yeah. All right. Well, if there's no other questions, and or if you think of anything after the fact, please feel free to email both Sam or I. If I can't answer it, and it comes to me, I'll bat it over to Sam, and vice versa. But you're always welcome to give us a call for anything. Sam does have a link, or he'll send out a link to book an appointment if you're just kind of taking an idea of, thinking about buying a home, what the next step is, and where to go. We can start working at that. Even if your plan is maybe a year from now or 2 years from now, we can take a look at that. And maybe just don't think you're ready for it. You might be pleasantly surprised. You may be ready for it now before prices go up even more. And we can always work with you there. You're never under any pressure. So, you can choose to work with us or not, and that's okay. But we're here to help you and get you as much information as possible.
Mm-hmm. Yeah, just to add on that, there's never a bad time to start the conversation with Nickey or myself to check the pulse, see where you're at, see what you can qualify for, and if there's any lack in what you can qualify for, then chatting with us to see about how to increase that amount, even if it is a year to 2 years down the road. Starting the line of communication with us is never going to be a bad idea. So thank you guys for carving out some time on your Wednesday afternoon. It is very hot, so I'm sure it was probably nice to stay in the air-conditioned homes. But yeah, thanks for taking the time to view our webinar and asking some great questions. That always helps make it a bit more flowing versus us sitting here in awkward silence. So thanks a lot for that. And thank you, Nickey, for coming on with us and yeah, giving us a really good insight on the real estate side of getting your first home.
All right, sounds good. All right, thanks, guys.
Bye.